shop when I was a little kid.
Here in Wichita.
Valley Center. That's what my mom wanted when she got from the States, and so we did that. My mom had her donut business, and my dad had his truck car business on Broadway. So I'm an original trailer trash kid. There's a little tiny mobile home park up on North Broadway. The land is still there, but all the buildings and stuff are pretty much gone. Little tiny one.
What? What do you want? I don't care.
She's got a girl working for her from Valley Center.
Oh yeah.
That's been with her for a few years now. A couple years.
Then I worked at the restaurant in Valley Center when I can't remember who, Betty owned it. And then my brother-in-law's father bought it. And then I worked for him. And then my sister and my brother-in-law got married inside that restaurant before they revamped it to the Mexican one. But that's been, God, my sister's been married for over 40 years now, so that's a long time. And then I was one of the first female bouncers in the city of Wichita, in the 80s.
Oh, that's really?
Oh my God.
We got kicked out of there.
I haven't heard that name in a while.
Me and my
Yeah,
sister
buddy.
and my husband, we all got kicked out of there for fighting.
That was when the law changed that a guy couldn't touch a girl,
Yeah.
so I got to be the girl.
Nickel
Picture
pictures
night.
on Monday nights, yeah.
Yeah, I got to meet Andre the Giant, Kabuki, the original Bulldog Bob Brown, the white guy, not a black guy. And I met a couple other ones. I can't remember the names. But they did an expo on the floor at Pogo's. They had the whole ring in there and everything. When that Kabuki came out, his arm went like, shot that shit up his arms like he did, that whatever that paint or fake blood was, crap got all over me. Like, you're disgusting. That came out of your mouth. But Andre was a very, very polite giant. He could sit on a chair like these, and I could be standing there 5'9", and he'd still be taller than me. But his hand, I could put my nose right here on his hand, and I couldn't see past this part of his hand with his big whole face. He shut his fingers down, and his fingers were on my head. So that was crazy. But and then he drank out of the picture.
That was just glass to him.
Well, exactly, because his face wouldn't fit in those cups. He couldn't take a drink because it just wouldn't fit on his face.
What time do y'all think those classes are going to
It depends on whether or not people be quiet.
Yeah, Shane's ready to start it. It's like
12,
10 minutes
one.
after 9.
Huh?
12, 1.
Well, no, Matt. I'm thinking hopefully 11.
Okay. I'll tell my landlord now.
I'm ready.
All right. So chapter 12.
This is the one we don't
No. That's chapter 13.
know. Okay.
Is chapter
Well, no, for us,
13 the
it's
one
good
we
to
will
see.
be here till 1?
Yeah, I'm going to be sick on Monday.
Is that the one we'll be here till 1?
We were last year. Probably.
It depends whether or not Matt's here.
Well, last year, I know we were here till
takes-
1:30.
It takes some time. We're going to talk about profit or loss from business. We're going to specifically be talking about Schedule C. Although anything that we talk about today can also apply to Schedule F. Because they're basically somewhat the same. So self-employment in the Schedule C, working the income and expenses section on Schedule C and figuring a profit or a loss. I talked about the business use of the taxpayer's home. Going to talk a little bit about Schedule F, but really, I mean, save for a few specific items, there's not. The form looks very similar. And self-employment tax. So we want to understand self-employment income. We want to be able to work a Schedule C. We want to know how to do the home office deduction options. how to complete the 8829, how to do a Schedule F, and how to do Schedule SE for self-employment tax. All right, so you are self-employed if you carry on a business or a trade as a sole proprietor. You're an independent contractor. You're a member of a partnership, or you're in business for yourself in any other way and work for money. Kind of a wide open thing at this point, but some people do take advantage of it, and these are the people that are buying the labor, shall we say? Because they'll treat them like contractors when it comes to paying them, but the way that they go about running those people is more like an employee. If I can take a job and leave a job without penalty, if I can do the job in any way that I want, dressed any way that I want, at any time that I want, that's a subcontractor. But as soon as the boss is telling you that, well, you must do this job in a separate way, in this way, you must dress like this, you must be here at this time, you cannot refuse any task, that's not a subcontractor, that's an employee. And it's not as bad as it used to be, but people have got this as, hey, how'd you like to have more money in your pocket? Okay, I'm listening. Well, instead of treating you like an employee, I'll treat you like a subcontractor. And then that way, I don't have to hold Social Security tax out, Medicare tax out, and your paycheck will go up. You'll get more money. And they won't withhold, they're not going to withhold anything. No Social Security, no Medicare, no income tax. More money for you. Sound good?
No, because you're not paying the money.
Well, no, you're not supposed to know that. But that's what they do.
So is it legal for a person that does home health work to pay the employees a flat rate and then pay all four of those, both sides, just to keep you at your $12?
I'm not a lawyer. So, I mean, at this point, I'd say yes.
I'm just curious, because to me it sounded weird.
But that's what some people would do. And then they go on still basically working like an employee, but now the employer is not on the hook for paying all these things that the employees is, like you said. So at the end of the day, now they all of a sudden come to file their taxes and find out that nothing was withheld and they're owing self-employment tax. So that deal wasn't so great anymore. An activity qualifies as a business if the primary purpose for engaging in the activity is for income or profit. Well, let's just focus on the profit part. If you're involved with the activity with continuity and regularity, but again, that profit motive is the one that really overrides it all. I don't have to do it as a full-time. It can be a sideline. If you own a business alone and not incorporated, you're considered a sole proprietor. An independent contractor is going to be considered a sole proprietor. So, again, I mean, just looking at it, I'm in business because I want to make money. As opposed to hobby income where I'm in business to get some money. There's a subtlety there. The hobby guy doesn't care if he makes money. I'm just doing this for kind of fun. If I make a couple of bucks at it, great. This guy up here, yeah, no, I need the money. I need to pay the rent. I need to buy my car. I need to buy gasoline, food, groceries. And maybe, like we're saying, it doesn't have to be full-time. It can be just something on the side. It can be driving for Uber.
What are we considered?
Your employees. Because you work a regular schedule, you're told how to do your job. You get a W-2, not a 1099. continuity and regularity is rather vague because it doesn't mean that I have to do it every day. It doesn't mean I have to do it every week. It doesn't mean I have to do it every month. As it's just as appropriate. Like right now, I'm doing some self-employment on the side. I'm taking part in a medical test for a new cholesterol drug.
As you stand there itching, does it protect you?
I've been on it for a few weeks now, but every time I show up at the office, they pay me $100, and all they do is just draw some blood. By the time the study's over, I'll have over 1,300.
That's cool.
And then you get a 1099.
I will get a 1099 for that. So yes, my last study that I participated in was a shingles study. They had a new vaccine. That paid over 1,500. So you
So
can
how
make.
much did you end up having to pay for that? For that?
Well, I do get to write off some expenses.
Yeah, the driving to and
Right. Well, there you go.
Yeah, when it's the clinic here in Wichita, it's over by you guys, just right down the street. That AMR facility that's
Right.
Carrying rock.
Oh, our office.
Yeah.
yeah, it's by your office down there.
I thought you meant our house because we all three live in the same area.
No, down by the rec road office there.
And when it's out of Wichita,
Same thing.
Well,
Still get the mileage.
yeah. Right. The cholesterol studies out of the clinic in El Dorado, which for me is not terrible because I live in Park City. So it's a straight shot over and a straight shot back down 254. It's not that big a deal. In fact, I spend as much time going from my house to the El Dorado facility and back as I would from my house to the Harry facility and back. The time is about the same. I just have less traffic, thank God.
You get a referral thing?
Yeah, I get $100 for every person that signs up.
years ago, I signed up for one arthritis.
I got
Yeah.
cholesterol
And
and I got.
that's what I thought I had.
But
But I was never diagnosed. So I went and I did everything, and then they sent me to their doctor because you had to have arthritis in the right
Oh, I
hand.
do.
And I got paid for the first visit, and then they found out I didn't have arthritis, so they took me out of the study.
Yeah, you weren't in the study, but they still pay you for that. Even if it's a failed visit. Oh, sorry, you don't
But
fit.
I don't
You
remember
still
ever
got paid.
getting a 1099 for it.
They got a lot more strict about it.
Well, and
Yeah,
then
this was a long
they
time
also
ago.
don't usually issue them if it's under,
400.
Oh,
some companies it's 6, but yeah.
Yeah. So, but that's what I do. I mean, and I take it. I mean, I can take it in front of it. Still, I'm still using the same employer identification number I have instead of giving them a social security
Yeah,
number.
I have an EIN number too.
But my EIN was basically established as a mystery shopper, which this is just an extension of
I
that.
just got it just in case.
So anyway, that's my current experiences with being self-employed. I will have a Schedule C on my tax return. If you own and operate a business with someone else, you may be self-employed as a member of a partnership. Any income you earn from the business activity must be claimed on your tax return, even if no reporting documents are received. So technically, when you got paid for that study, it was on you. Yeah, nobody's going to do that. Net earnings from self-employment at least $400. The per the filing tax requirements, a return must be filed. A 1099 actually must be issued at $400 because that's, and you got to file a tax return. Why? My standard deduction is $32,000, but I got to file a tax return if I just make $400 in self-employment. Why? Why is that?
Because you gotta pay self-employment taxes.
Because self-employment tax becomes relevant at $400. It becomes a legitimate number. So I might not actually owe any income tax because my standard deduction covered all of it, but I'll still owe some self-employment tax. And that's why the $400 filing threshold. The source of your income and your involvement in the activity will determine whether it's self-employment. The following are some sources of self-employment income. Income from a part-time business you receive as a sole proprietor. Income you receive as an independent contractor. I fall into that last category. I can choose what studies I want to participate in. I can choose what facilities I want to, I'm not so sure that I want to go up to the Newton facility, but it exists.
Where do you hide your third arm?
It's a
In the
tail.
back?
It's
Oh,
a
the
tail.
That's the only thing that scared me. On stuff like that. On eyeball command,
Yeah, no, they're past that study. This is a double blind of somebody half they're getting the placebo, half they're getting the pill to find out whether it's doing what it should. Let's see here. Any self-employment you receive from activities of U.S. possession, rent from real estate and property leased with real estate if you're a real estate dealer and provide services for your tenant. So, let's interpret that one for a second. Normal landlord is actually Schedule E, not C. So I wish they would have actually held this one until you talk to E. But if you are a licensed real estate agent and you have rental properties, it's C. What's the difference? Schedule C income, my profits are earned income. Schedule E income, my profits are unearned income. Unless I'm a real estate professional. Then it's part of the job. Earned income. I can qualify for earned income credit. On Schedule C as a real estate professional with rental properties. Schedule E is unearned income. It does not qualify you for earned income credit. Period. So it makes a difference. Income you receive from the retail sale of newspapers or magazines. What? What are those?
Is that the door-to-door one?
Income you receive as a licensed real estate agent or direct sales of substantially all your pay is related to the sales of other output rather than to hours worked and services performed under a written contract that provides that you will be treated as an employee for federal tax purposes. Remember when we talked about statutory employees and how they can write off their expenses?
I don't like that one.
Statutory employee?
It
Why?
doesn't make a bit of sense.
By statute, by contract, I'm treating you as an employee, but in effect, you're more of a contractor because you're allowed all the leeway of how to perform, when to perform, where to perform. And your biggest participant in this area is just look at your insurance agent for the most part.
Insurance agents.
Huh?
I think they're getting out of that with
They are.
insurance.
I've also seen it on financial planners though too,
Yeah.
because they kind of behave the same way. They have it a little office someplace. They show up whenever they want to, basically. Do the business however they choose to, because we're an agency. But State Farm withholds their paycheck, it withholds their taxes by statute, statutory employee. Income passed through to you from a partnership on a 1065 Schedule K1. Certain K1s trigger certain forms. 1065 is going to be treated like self-employment because you're a member of a partnership, not a trust. Self-employment income does not include rental income from real estate and personal property leased with real estate, unless you're a professional. Self-employment income does not include interest income, dividend income, or capital gains or losses.
fish, you're getting wet.
Business income may be reported to you on many different ways. 1099 NEC is the most common, where the NEC stands for non-employment compensation. Box 1 is what you got paid. You might see a 1099K, payment card and third-party network transactions. If I do a lot of transactions on eBay, I'm going to receive a 1099K from PayPal, most likely. And it's broken down by month. This is that big sticking point where the IRS wanted to mandatory make the credit card companies report a 1099K, and there was enough blowback on it. They kept on making them to have to withhold it because the 1099K, it doesn't recognize for the fact that did I pay you for a service or did I reimburse you for an expense that you made at my, because the 1099K is going to treat it the same way.
Well, now on those little cards, you have to put in a notation of what the payback is for.
And that's what it's working towards to make this relevant. It's still not mandatory. They still haven't got to the point that where the IRS says, if you get this much money, you must issue a 1099K. Now they'll go out, but like you said, PayPal is especially good at this at the moment. It's like,
Cash App's doing it too.
yeah, is this for a person-to-person transaction or is this for a purchase? It says something different. But
Yeah,
that's,
it's like family member.
yeah, it's a gist of it. Form W-2, box 13, check to indicate a statutory employee. Now, the wages and income will be treated as regular income on your 1040, but now Schedule C is relevant, and it's going to be negative, and the IRS isn't going to care about that because, remember, or we'll find out in a minute, the IRS doesn't like it when you have consistently filed Schedule C's with negative numbers. 1065K1, partner share of income deduction is going to trigger a Schedule C. Your own records of income collected, i.e. receipts, deposits, etc. That's about half our Schedule C's. Just people that are working for themselves. Whether it's doing hair, being a stylist, doing landscaping, daycare. You know, it's a cash transaction, basically. Could be checked. You know. Cash App's becoming more and more of a thing in that department, but still. We have Zelle, you have Cash App, you have.
Yeah, but I thought you had something different.
PayPal, yeah.
There's a lot of them. There's a lot of different.
Yeah.
So, I could have a form, I might not have a form. That's not a problem. If you're self-employed, you report your business income expenses on Schedule C, profit or loss from business. If you're self-employed as a member of a partnership, you do not use Schedule C, your share of the income expenses show up on a K1. You don't have to do the math. Whoever is making the 1065 for the business, for the partnership, which could be me, I can do this, puts in the business income and expenses and then generates a K1 for the partnership members. And then that goes out to the members of the partnership. They use that K1 to fill in their 1040. You're not here, shut up. Your questions, you don't ask questions until tomorrow
You
night.
don't matter.
I was gonna say, now are you out tomorrow night?
With him here now, that 11's become iffy.
Oh, no.
Yeah, so shut it.
If you're self-employed and have more than one business, report the income and expenses for each business on a separate Schedule C. I'm a little bit more lenient on this one because technically if I'm running a lawn service and I'm also putting up holiday lights, those are kind of two different businesses, but I'll treat it as one. Because the nature of the idea is still the same. I mean, outdoor decorations, whether it be by plant or by light. So the inherent, and we do snow removal, all in the same thing. Inherently, they're all kind of the same business. I don't have a problem lumping those in one. But if I have one business baking cookies and another one doing fishing lures, yeah, no, those are two different businesses. I need two different schedule Cs.
Why don't you do that next door, do a cake and bakes?
It's one business. Cake and vapes. It was one business. Now, you do bring up the question, could she have?
Yes.
She could have. If she wanted to run the cakes as its own business and run the vapes as its own business, she could elect to do that.
I mean, those are two of the oddest things to put together.
Mhm. Get the munchies, is she selling the cake?
Well, yeah, but when you say it that way, it makes it different. But in mine, it's like having food with smoking stuff.
Well, I don't know. Okay, I mean, my question to
When
you
we
at that
took
point.
food handling,
It
you know,
was
for our cars.
THC.
Yeah,
You're gonna get the munchies.
But my question to you is that, okay, I'm going to go down to Tom's Liquor, and attached to Tom's Liquor is Smoke Shop.
Right.
But at least they're separated
But they're
by a wall and
separated.
door.
They're separated by the wall.
This wasn't.
Yeah, I know.
So
But should Tom do two different Schedule Cs?
I would, because
I bet the smoke shop has its own.
Yeah.
I bet he does too.
I think it
But
has its own address.
does he have to? No, he doesn't have to. Because at the end of the day, he's still using the same employees to staff it. Nobody's standing in the smoke shop until
Because
somebody
to serve
goes.
to sell the cake, you have to have food handlers, and for your THC, I don't think you have to have any.
Yeah, but when they say cake over there, is it the actual cake?
It was cheesecake.
And she's making it there.
No, she was buying
no,
it.
She was buying it already prepackaged. She
So
never
didn't have to
touched
have
it.
any other licenses.
No, I don't think so.
She was just buying the individual slices from
Sam's or
Sam's or Dillon's or
Because
what
I
have
know
you.
that they actually have a brand for THC stuff called cake. That's
Oh.
why I was.
No, yeah. So I mean, it just depends on how you want to handle that, and you know what he said. Like I said, for Tom's, I'd go either way, just because the employees are hanging out in the liquor store until somebody walks in the smoke shop, and then one employee goes over there, and as soon as they leave the smoke shop, they go back to being in the liquor store. It's the same business because
A lot of them are.
I'm not treating my payroll different. Oh, you got to clock out from the liquor store and clock in
Oh,
at the
yeah.
smoke shop.
Back to it.
Yeah. You're
Same employee does
changing.
two jobs.
Right. So it's one. Could I do both? Yeah, if I wanted to. Especially if I just had a guy hang out in the smoke shop all day. The total net profit or loss from all sole proprietorships will be combined on Schedule 1, Line 3. If you're self-employed as a farmer, report your business income and expenses on Schedule F. And it has its own line in 1040 also. Haven't had a farmer for a bit, but a couple years ago we did. Brenda kept on trying to do the Schedule C, and she kept on coming in with the strangest expenses. Until she found out, well, she was selling wool. Well, how are you selling wool? Well, I have sheep. You have a farm. Took her 3 visits to get there because she was the woman was always very vague about these things, what she was actually doing. If you and your spouse jointly own and operate an unincorporated business and share the
Yeah.
profits and losses, you're a partner in the partnership, whether or not you have a formal agreement.
Just so that everybody knows when they say cake and bake.
Well,
Yeah, it's like a brand.
This
Oh, and don't tell me you know what it is. I mean, this way everybody knows what they
Huh?
Qualified joint venture if you and your spouse both voluntarily participate as the only partners in a jointly owned, operated business and file a joint return for the tax year, you can elect to be taxed as a qualified joint venture instead of as a partnership. Each spouse is treated as the sole proprietor for income tax purposes. Each will receive credit for Social Security and Medicare taxes in and of themselves. To make this election, divide all the business items of income, gain, loss, deduction, and credit according to each spouse's respective interest in the venue. On the return, each spouse files their own Schedule C and their own Schedule SE. So when I did the first year I did that one trucking company, they came in here. He was the driver. She was the bookkeeper. She stayed at home and watched the kids while he was out on the road. They wanted to do it all under him. You could do that, but you're doing her an injustice. Take a hammer after that goddamn thing.
I know, right? I hate that thing.
Yeah.
I suggested that they do it as a joint venture. She was just as involved in the business. He was driving the truck, sure, he was doing all the manual labor about it, but she was the one doing the books. She was the one finding the jobs. She was dispatch. It's 50-50 as far as I'm concerned. So I talked them into it because if I didn't do it, then she receives no Schedule C benefit, or she doesn't get any Social Security benefits when she goes to retire. Because he took them all. Well, I'm really glad now that I talked him into it when I found out that he was deported. Because all those Social Security benefits he paid, he's probably not going to get. So I'm glad I didn't. I'm glad I managed to talk him into splitting it.
But she would get something later on, right, when he was old enough for Social Security?
We don't know.
I don't know. As somebody who was deported, I'm going to kind of suggest no.
They just, the government just keeps it.
There might be a tax treaty between the United States and Mexico on that. I know there is one for Social Security between the United States and Canada when it comes to that. So there might be, I don't know, but either way, she would have been left holding the bag. So I'm seriously glad I talked him into splitting it up, where she was at least getting, yeah, she's paying self-employment tax, but at least she was getting her share for Social Security. At the time, I had no idea because his Social Security number was a good one. It wasn't I-10 or anything. Valid for employment. Statutory employee is an individual who is treated as an employee for Social Security and Medicare, but is being treated as self-employed for income tax purposes. W-2 box 13s can be checked. Where you should report your statutory wages expense if you have expenses related to your activities as a statutory employee. If there are no expenses, they're reported as usual. Goes to 1040 line 1. If you have expenses, enter the wages and expenses on Schedule C, separate from any other self-employment income. I'm still going to put my W-2 in as normal. And then when I box in that, when I click that box for the statutory employee on box 13, it'll trigger the Schedule C. And if I don't have anything in it, then it'll go ahead and ignore the Schedule C. If I do put it in there, then it'll go ahead and behave as advertised. Talk a lot about it. I've done it once.
better be quiet.
Now, you have to ask those questions tomorrow. All income you earn is reportable, according to the IRS. And according to Joe Blow on the street, yeah. Many sideline occupations are really hobbies. They don't have a profit motive. Or I don't behave in a business-like manner. Hobby income, the hobby is not considered a business because the activities are not carried on to generate profit. Hobby income is still taxable, as reported on Schedule 1, Line 8J as other income. Losses aren't deductible. The income, however, is treated as unearned income. So the only tax you're going to, and it's not self-employment income. It's not subject to self-employment income. Hobby income is only subject to income tax. This is the loophole that Brenda and I and Shannon and all of us figured out a while ago. Somebody comes in and wants to try and file a Schedule C. And we know, we can see that they're trying to maximize for earned income credit. You'll recognize them after a while. But when we start asking the questions about how you operate your business, how you keep track of your income, how you keep track of your expenses, well, one response is, well, I don't have any expenses.
That's a red flag.
Really? Show me a business that has no expense. If that was true, everybody'd be in it. I'm not buying it. Or the other ones, I really don't keep track of that. Well, then you're not behaving in a business-like manner. And then we just take their income, we slide it over into line 8J and say, here you go. I'm going to report the income, and you're not going to get any tax credit because you haven't convinced me you're a business. So I'm going to treat it as hobby income. Because, like I said, you're not behaving in a business-like manner. Now you don't qualify for EIC. You might walk out the door over this. I don't care at this point because your return kind of smells. I'm not sure I really want to do it. Damn sure not going to do it the way you want me to because you haven't convinced me that you qualify. You can still change my mind. Show me receipts. Show me a journal. Show me some spreadsheets. I don't care. But don't come in here and tell me, here's my income. Okay. Where's your expenses? I don't really keep track of that. Well, then you're not business. One indicator of whether an activity is considered a business or a hobby is the perception of profit, a profit motive. Are you trying to make money at this? Again, goes back to it. Are you trying to make money at this? Well, if you're not keeping track of your expenses, you're really not trying to make money at this, are you? Because you have no idea whether or not you're making money. An activity is presumed to be carried out for profit if it produces a profit in any of the last 3 of the last 5 tax years, including this year. 3 of 5. If you have more losses, so if you're at 4 or 5, 5 of 5, the IRS themselves can determine that
Maybe you're not business.
you're not a business. Even if I answer the questions and say, hey, we're behaving in a business-like manner. He's keeping track of his books. He's keeping track of everything. The IRS can come and say, oh, okay, well, 4 of the last 5 years he lost money. Hobby. They could reclassify it themselves. We'll come back to that. Activity that consists primarily of breeding, training, showing racehorses are presumed to carry on for profit if profit was produced in 2 of the last 7. Well, this is in Kentucky, so I'm not going to worry about that so much. And why is it just racing horses?
That's a Shetland. What are you gonna do with that, right? That's it.
Yeah, but what? Okay, what about greyhounds? Come on. Moving on. If your activity is not carried out for profit, the deductions and losses will be limited per the hobby rules, which currently says you don't get any. You report the income, you don't get any expense. If the business cannot meet the 5-year rule, it does not necessarily mean the business is not carried out for profit. The IRS will want to ask you some questions. Question number 1 from the IRS, if you're not meeting the 3 of 5 rule. Question number 1, do you carry on the activity in a business-like manner? Which is where we've decided to go. You come in here and you tell me that you only have income and you don't show me any expenses. Are you behaving in a business-like manner? No. I'm going to say your hobby right now. But this is the IRS asking this. Somebody like Mustang Trucking.
Right. Yep.
Does he carry on in a business-like manner? Yes, he does. By the way, he hasn't made, well, he actually did make money this year, but usually he's in the hole, but we'll come back to that. Does the time and effort you put into the activity indicate you intend to make it profitable? Okay, so that's their next question. Well, okay, how much time are you actually spending on this to try and make it work? If you say, I'm only spending an hour a week on it, probably not. 5 hours a day? Probably. Do you depend on the income for your livelihood? Not the most important question because, side hustles can qualify for this. But it helps a lot to say that you're in business if I'm in business and that's my only income. I make money or I starve. And if that's one of my motivators for profit, the IRS will actually look into that. Are the losses incurred to circumstances beyond your control? Yeah, 2020 was a good example of that. Circumstances beyond your control. Yeah, well, I had to close for 3 months because I wasn't allowed to let anybody in the goddamn door. I had no control over that. So the IRS will take a look at that. And that's still within the 3 of 5, by the way. It's 5, but it's still within that window. Have you changed your methods of operations to improve profitability? Well, again, it's going back to what do you know you have a problem, you've been losing money consistently. What are you doing to try and fix it? What are you trying to do? Do you or your advisors have the knowledge needed to carry on the business or activity successfully? It's not a requirement, but hey, it does help that if I'm in the landscape business, that I actually know what the heck I'm doing. Do I have a degree in horticulture from K-State? Landscape architecture? It would help a lot. I mean, even at this, for me, it'd help a lot on a lot of it. I have a degree in business administration. So I have the knowledge to answer that question on almost everything. At least at its core. No, I'm not an architect. I can't draw a building, but I could be in that business, just the bookkeeper. Have you been successful in making profit in similar activities in the past? Did you have another business at another time that was similar to this one? And then you're coming back to it. Maybe you sold out of your old business, took 5 years for yourself, and decided, this retirement thing ain't for me. It's boring as heck. I need something to do. So you go back into business. Does the activity make profit in some years? Okay, so let's throw out the 3 of 5. Let's look at the last 10 years. How many times did you make a profit? Sometimes it can be just as simple as it's paper. Can you expect to make future profit from the appreciation of assets used in activity? Which is my point. Maybe my losses are big right now because I just bought a whole bunch of stuff and I'm in the process of depreciating it all. So even though my Schedule C says that I lost my shirt, my bank account might actually say something else. So, but we're looking into it. It's like Bob made that comment when he first started up the business that at one point, you know, the guy that showed up as a waiver for an hour peed his pants, threw up, and Bob took him home, made more money than he did that year. Well, yeah, I thought about that after a while, and I thought, well, that was the second year in business. Everything was still being depreciated. Of course, you didn't make any money. You're still depreciating the desk, the computer, the monitors, the printers, I mean, everything. We'll go back to the truck driver guy. He's doing fine until I throw in per diem. It's an expense that he's allowed. For every day out he's allocated a per diem as an owner-operator. Yeah, he's a 1099 guy. He's an owner-operator. He's contracting.
W-2 driver.
Yeah, the W-2 drivers don't get this. But he's an owner-operator. For every day out, he gets $65 per diem. Doesn't mean he spent $65 on stuff. Just means that he's allowed 65. And, well, you maximize that. Heck, he could get by on a granola bar and a bottle of water and still say, $65. Well, you spend $1.98. $65 expense. So he's always losing money. Again, his bank account says something different. Which really sucked for him when he went to go try and get a mortgage. Because all they're allowed to do is look at his tax return. His tax return in the past 10 years all said you lost your shirt. And that was it. The loan officer's like, I see what's going on here, but I can't help you. Business records are used to prove the source of your income as well as to support deductible expenses and credit. Business records must always be available for inspection by the IRS. That's why we say, in this office especially, if you have a receipt, take a picture of it. Save it someplace. Because thermal imaging paper goes blank after a while. Some people don't get it. But if the IRS can't read it 3 years from now, they're going to throw it out. It might have been your biggest expense. But if they throw it out, you're screwed. Well, I can't read it. And they're not going to sit there and try and trace it out or anything. Either they read it or they can't.
Ones that are responsible, do it.
Take a picture of it.
Do
Scan them.
quarterly,
Yeah.
Or monthly.
or monthly. Put it together. Don't put food on top of park receipts.
Oh, God.
Yeah.
Business checking account should be open to keep your business transactions separate from your personal ones. It's not a requirement, but it is suggested. Right now, I kind of meet this requirement because AMR pays me on a loaded debit card. So technically, it is. It's a separate account.
Good copy of it.
It's on the app.
Off the cloud.
It's on the app.
Yeah.
Every time I got paid, it's on the app.
I'm sorry.
In addition to the checkbook, canceled checks, deposit slips, bank statements, other records that need to be maintained include sales slips, invoices, receipts, delivery receipts, inventory records, and any financial statements. Now, I could do a better job myself, because I should keep a journal of my mileage. I don't. I should, but I don't. Of course, it's not very hard for me to go back and reconstitute it either. Go to the app. Every time I got paid, I went to the office. Therefore, I know what days that I drove there. I go on Google Maps, round trip.
Got it.
I can do that. And it's justifiable. I can prove it. It'd be better if I did it more extrapolate. I can't say that word to save my life. Amounts spent on meals, travel, gifts are subject to additional documentation requirements to be deductible. All expenses may be ordinary and necessary expenses in carrying on the business. A Bible salesman expensing his junket at the strip bar, probably not.
I
What?
really thought that was Bob.
I did too.
Bob?
Yes. I gotta go outside. Is it?
I didn't see anybody, so you better go check.
They went by first. She went by that.
Well, she went out to smoke, so she went to her position. So, ordinary and necessary. That can be pretty vague. But obviously, if it doesn't fit, it doesn't fit. The Bible salesman at the strip bar doesn't fit.
Bring it in, Jesus.
No, that's the reverend at the strip bar. I'll be more
He's
into.
bringing the literature in.
Yeah. Schedule C is 2 pages. Used to report your self-employment income and related expenses. Some expenses may require attaching some other forms. For example, depreciation. You might need a 4562. If part of your home is being used for business and you want to take the business use deduction, you need the form 8829. If you have a profit, you need a Schedule SE for self-employment tax. Schedule C is broken into 5 sections. Background information on lines A through J. Telling the IRS who's in business, what the business is. Income, Part 1, Part 3. Expenses, Parts 2 and Parts 4. Information on your vehicle, Part 4. So,
It's the guy from the loan store.
This one drives a white.
that El Camino.
Yeah. The blue El Camino.
So if when I do my business expenses for my mileage, I'm going to be filling out Part 4. And lines 20 to 32 are the actual calculations of profit and loss, where the math happens. This is what a Schedule C looks like. We'll go into a little bit more detail about it. Here's your biggest friend, Part 5, other expense. Because sometimes it might not fit in one of these categories. I can't make it fit. There's nothing here that covers it, so I'll put it in other expenses. And sometimes there might actually be something up here that would make it fit, but I want more detail.
Everything like that farm I did last year,
Yeah.
got all the rental equipment and everything, that's what I had to do it for.
But see, like for instance, when I do a truck driver, I make sure that I list diesel separately on other expenses. I don't want it buried in with anything else. Why? Because I know that as a truck driver, diesel is his one biggest single expense.
Diesel and debt, debt. That's that damn fluid that, yeah.
Diesel exhaust fluid.
Yeah.
Yeah, it's death. It's, yeah.
Pain in the butt.
I list those separately because although the guy might have a 1099 for $500,000, I'm probably going to have a diesel expense of $400,000. And I want the IRS to see that huge expense relative to the income, why it exists. And as a highway tractor driver, diesel makes sense. They'll look at it, look at what he does. That makes sense. It's reasonable, it's expected.
Does it come on their reconciliation papers?
Sometimes it depends on whether or not they bought the diesel at the yard or they're going down to the truck stop, and it can be both.
So if like if they go to Love's, they're gonna have a.
They'll have a Love's receipt.
Will it break down for both those products?
What? Oh,
The
DEF and
DEF and
Yeah.
yes, because it's two separate
It's
purchases.
two, yeah, it's two separate, it's like buying oil and, and antifreeze, yeah.
Now, sometimes you can only see the DEF in containers, but I have seen them at pumps.
they do that.
Yeah, just depends on whether or not you're at a good truck stop.
So that's what they mean by when you feed the, on
Yeah, it means they have it available and most likely at
I
the
never
pump.
understood what
I
that
didn't.
was.
I've never heard of it either.
But I've seen it when I'm traveling, you know, back and forth to Wisconsin, that DEF, and I'm like, well, who cares if
Majority of
it's.
all the truck stops have pumps that are certified with DEF, that have DEF panels.
Yeah, but when I seen the DEF, I'm like, oh, it's compatible for a deaf person, you know what I mean?
Oh, yeah. No.
So, that's what I took it as.
Yeah, in Wisconsin, that actually makes sense, but, you know. All right, so let's talk a little bit more about this. Background information, taxpayer's name, social security number, and make up a heading of the form. Line A is the type of business or professional activity, including the product or service. What do you do? What are you doing? When I report mine, I'm still gonna say I'm mystery shopping, even though it's a mystery. I'm just participating in medical research, but inherently it's still kind of the same thing.
I love the mystery shoppers when I worked in restaurants. I could spot them the minute they started
Yeah,
talking.
because they're required to ask the right questions.
Yep.
Nobody ever asks those damn questions.
Nope.
I love doing the Papa John shops, though. That's how we have free pizza in here a lot of the times. I just take a mystery shop, have it delivered here.
Until they figured out that he
It's easy.
was a shopper, and then we had to stop for a while, so.
Yeah, they had figured it out because they know the time periods when it's going to happen.
Oh, they picked any time at the stores I worked
They
at.
can, but they know that if I had one, then I'm probably not going to have another one until next month.
Right? But usually they always pick lunch.
Describe the type of service or product. Like I said, well, I'm providing a service research. I'm researching. Do not enter a company from the 1099 NEC. There is a line for company name, if you have one. Ghost Services. That's mine. I thought it was okay. If you own more than one business, a separate Schedule C for each one must be completed. If you and a spouse accept to follow a qualified joint venture, then each one of you must complete your own. Line B, enter the appropriate business code. Good luck. The IRS has a list, 5-6 pages of codes that follow nothing. Even if it's searchable, you start typing in keywords that you think that would fit. 7 times out of 10, you're gonna miss. I can't remember what I was up to last. Like for instance, I've been talking about a truck driver. If I put in truck driver, I'm not going to come back with anything. Because truck driver is technically called highway tractor driver.
And it's not a tractor. A tractor to me goes on a farm.
Then why do you call it a tractor trailer?
That's what they call
I know, but I'm just saying it doesn't make sense.
Why do you call it a tractor trailer?
Semi.
Semi.
That's the tractor. The tractor is the semi
and then
part.
Again, semi means smaller than full size.
Semi means it's part something.
Yeah.
Part tractor.
You know what I call tractor trailers? Because the tractor is actually got the same engine as a field tractor.
That cat, you can find it in the that Caterpillar engine that's under the Kenworth hood. You can find it there, or you can find it at Caterpillar
Yeah, holy cow.
in their front end loader.
Yeah.
All right, so what was I going to say? I was going to say something else about that. Oh yeah, another one. Like Kelly brought this one up too. I can't type in plumber.
Yeah.
That won't come back with anything either. If I type in house remodeling, which
Mike.
I will get,
Yeah.
and it kind of fits because he's not doing original construction, he's doing repair.
Repair.
And so it falls under that category. There I am.
Kitchen, the bathroom.
Yeah.
You were running your lines outside.
Yep.
Yeah.
So that's where I put it because this is the best fit I could find. Go with what fits the best. You'll hardly ever come across something that's a direct fit. Now, okay, if I went into business for myself as a tax preparer, there actually is a tax preparer.
In your daycare?
Yeah, there's daycare. If there's a separate business name or a separate business address different than the one used on the return, enter that information online C&E. While I run my business out of my house, I can leave the address line blank. It'll automatically assume the return address of the return. The address listed on the return is the address for the business. Enter the employer identification number if you have one. If you're going to go to business for yourself, get one.
Free.
Free and easy. Go on the IRS website,
Yeah.
answer a few questions. You'll have it in 10 minutes.
When you have a client that calls up and says, I gotta get a hold of the IRS to get an EIN, no. We can help them do it online.
And that's for a lifetime, right? You don't have to renew those.
Right.
Yeah, it's lifetime, but I like to make sure that occasionally I file, there was time that I wasn't very much into it, and so I wanted to make sure, I didn't want it to go inactive. So I just manufactured a reason to file it. Well, I took one mystery shop for $20, and I filled out the Schedule C for it, just so I could make sure my EIN was still
I've
active.
never used mine, so I don't know if it's.
But no, technically, it still should be yours. I mean, it's like Social Security numbers.
Yeah, one and done.
Well, you realize they're recycling Social Security numbers now, right?
Right.
Used to be they kept it regional. They can't do that anymore. If you don't have one, leave line D blank. But like I said, get one. Do not enter your Social Security number on D. Do not enter the payer's identification number on D. So we have Mr. Patel. He owns a tax preparation business called Many Happy Returns at Liberty Lane in Chicago. He has an EIN. The business code for tax preparation is 541213. And so this is the top of his Schedule C.
Not the,
You're not here.
I know, but.
What?
On the truck driver,
Yeah.
the DOT regulations. They went from 100-mile radius to 150 to 175 mile radius.
Wow.
And now you're required to keep a time
Well, most people have electronic logs anyway.
Yeah,
so-
yeah, they're all going
Yeah.
EDL or ELD or whatever.
If you go to normal
Also, on a truck driver, if they bring in a receipt for a medical card, that is absolutely
Required expense.
required, so they can write that off.
Yeah.
They have to have those every 2 years.
Yeah, it's a legitimate business expense.
Unless you have
a result of a high blood pressure?
Well,
that
no.
it's more?
Okay, no, hold on, you're right.
I'm
Like
just
him,
asking a question, really.
He has to do his every year because he's diabetic.
Yeah.
Okay, it's still a write-off because he's required to get it every year.
Is that
But a
prepaid
normal
one?
truck driver, it's 2.
Well, I know somebody
You
that
get
just had to
benefits
go
put
to the
on?
doctor
Yeah.
because he had a high blood pressure
Right,
reading, so he couldn't do it
That won't allow him to get a DOT card.
right. But
Until it
if
gets
you
to that
complete the
point.
physical,
Yeah, he did.
if you pay for a physical and you get your card, it is a write-off. Okay? Now, Kelly got a 2-year one this year, or last year.
Yeah.
So he's good.
That's what, this is what a medical card looks. And if you
So
ever.
is it proof of insurance or just a card?
No,
that
That's-
it
says-
that's a medical
says-
card.
It says that they are medically fit to be able
Oh.
to drive. They even measure their necks.
A
Yeah.
bill?
Yes.
Yeah. And they check you for sleep apnea and everything else.
Why would they check your neck?
They always do. That's a sleep apnea.
Something, it's a sleep apnea issue. But if you ever have a question on what is, able to be written off, call me, call Shane.
Now, I will tell,
Anywhere between $100 and $200
I
a
will
year.
tell you this,
Or
on a
every 2
DOT
years.
card, if you go to a stage 1 diabetic, you
You're
lose
done.
your commerce. And
Is
they're,
it because you could have seizure,
no,
No,
You
because
lose
you could
your
go,
commerce.
blood sugar could go too high and,
fall off?
yeah.
Yeah.
And
but
you,
you'll lose your commerce, and they'll put you on strictly in state payments.
Oh,
That's the only thing you can drive. And you're
Is he the
monitored
one
to
that
drive
always
over-
honks every
Yeah.
one?
yes,
Well, you know, I was getting ready to ask, why do we not have the horn honking anymore?
he
About
does when he
9
I
drives
do,
by.
when I
I
drive by.
never hear it anymore. I have not heard it once
The
this
day
year
you
so
were
far.
here, he did.
Yeah.
Really?
the day.
If I see this little red
And then he's
car
also
sitting
come by early before 9 o'clock.
Yeah. All right. Line F. Tell the IRS your accounting method. 99.9% of people use cash basis. I don't even really want to talk about accrual.
We don't use it.
Cash measured income is reported when you actually get paid. Expenses deducted when you actually pay it. If I pay my expenses via credit card, that is when it's considered paid. Not when I pay the credit card bill. Accrual is slightly different. I count the income as I earn it, which is kind of stupid in one regard because under an accrual system, every minute that I stand up here, since I'm hourly, I got a little bit more income. I got a little bit more income. I got a little bit more income. That's the accrual method. That's kind of silly, but that's what it is. The accrual method on expenses is when I rack it up, not when I pay it. So if I went and bought something on credit that I'm not going to pay until the end of the month, under the accrual system, I still have to expense it right now. Which the only time that makes any difference is going to be at the end of the year anyway.
Dude, kill that phone.
Just put it in for us,
Sorry. In general, you materially participate in business if you perform business activities on a regular, continuous, and substantial basis. With the combined activity of you and your spouse, either one of you can actually make that meet that requirement. If you do not materially participate, your losses will be limited.
See, and materially doesn't make sense either to some people.
No, because materially suggests one thing, but what they're really meaning is,
Physically participating.
yeah, basically. And that isn't, and it's up to subjection too. I mean, I don't have to necessarily be involved in a day-to-day activity physically. Material participation could be, well, I have a phone call every day with my partner, and we talk about today's business and what we're going to do about it. I just materially participated. I didn't do anything else with the business for the rest of the day. I had a 10-minute phone call at 9 o'clock. But in that 10-minute phone call, we decided what bills were going to be paid, what contracts we were going to accept, what jobs we were going to do. We made those decisions together. I materially participated. If others conduct your business for you, review the 7 tests for material participation in the instructions in Schedule C. If you started or bought a business during the current tax year, tell the IRS, because they're a lot more lenient on your losses in the first few years. They figure you're going to have big losses. It's expected. Line I, check yes if you paid some contractors enough money to require a 1099 NEC. So I don't pay anybody to do my business. I check no. The plumber guy, if he contracted out, he checks yes. J, actually indicate whether or not you actually filed it. And if you click yes on one, you better file it. Income sections for figuring out your gross income of the business. Start with the gross income of receipts and sales. Subtract out any returns or allowances. Well, if my business is just labor, I don't have to worry about returns and allowances. And that's most of our clientele. They're providing services. They're not selling things. They're selling their time. Add any other income directly related to your business, such as refunds, prizes, and awards. Include your business income from the checking if you have interest income. Except on sole proprietor, it doesn't belong there. It goes back on with the regular income. Add all that together, that's your gross income. Gross receipts or sales is the total sum of cash, checks, payments received from clients. Do not include state sales tax. So if that check you got was including state sales tax, you need to subtract it out of there before you record it. Because they really don't want you to expense it. Well, if I don't record that I got it, as income, I don't have to expense it. Because it wasn't my money. I collected sales tax for the state of Kansas, but it's not my money. That's why they're saying don't count it as income. It was never my money. I was the go-between between the client and the state of Kansas. If you receive a 1099 NEC, that's something that can go in this area. You can receive multiple 1099 NECs. Add them all together, and they will go in this area. Also include any other gross receipts from income. Even if I didn't get a 1099 NEC, record it anyway. Next, returns and allowances. Subtract out any return products or allowances from rebates and rebates from the sales price you made to your customers. An example of a refund made to a customer for a damaged product or unsatisfactory service. Again, not really something that we have to deal with our clientele. Oh, COGS. Cost of goods sold. This is part 3 of my Schedule C, but if I don't sell a product, I don't have to do Schedule 3. like I said, most of our clients are service businesses. They don't sell a product. They don't do COGS. They don't have part 3. Now, if I had a baker walk in here, yeah, I got a problem. I'm going to have COGS. 'Cause you got to buy the flour, you got to buy the yeast, you got to buy the sugar, you got to buy the milk, you got to buy the eggs. All of those are components of cost of goods sold. Yeah, pans actually won't go under COGS.
One with the same one, you gotta buy pipe, you
Yeah.
gotta buy glue, all your things.
But the reason why the pan isn't, because I'm not selling the pan.
Oh.
After I get done making
Right.
it,
Selling a product out.
now I'll run that back though. If I buy the disposable pan,
Then you
you know, the aluminum pan or something that,
Single serves.
yeah,
can.
then that could be a component of COGS. But if I'm a cake baker, you know, as soon as I dump it out of the bundt can, the cake mold, I put that in the dishwasher.
Right.
If I bought one, technically that would be a depreciable expense because it's expected to last more than 1 year. But we'll talk about depreciation next time.
Yeah.
So, but I'm glad you brought that up because you would think, well, that's a component. I can't make a cake without the pan.
Right.
True statement, but it is not COGS. I'm not selling the pan. Keeping the pan. On COGS, you have to determine how you're going to expense things. LIFO or FIFO. Thank God we don't have people doing COGS. LIFO, last in, first out. My oldest item is the one I just used. There's the example coming up. FIFO, first in, first out. My newest item was the one I used, so therefore, my oldest item I will never actually expense out unless I absolutely run out. No, that's a depreciable expense. Gary owns retail furniture store. He purchased 2 identical tables. One he paid $850, the other $1,050. He got the $851 first. Sold one of the tables in 2024. The inventory method that Gary uses will determine which of the tables he actually sold, at least on book. It's not physically what table walked out the door, it's actually depending on his accounting method. Gary uses FIFO. The 850 table was the first purchase, so it's the first sold. Gary uses the LIFO method. The 1050 table was the last purchase, so it's the first sold. I don't care. I mean, at the end of the day, I don't necessarily care.
But you would care just about the amount. Dollar amount.
As an expense. But this is all part of COGS. And COGS is only relevant if I keep inventory. If I only go out and buy enough flour and eggs and milk and sugar to make the amount of cakes I need to make, and I'm not going to have anything left over, yeah,
Yeah, pay by
then
the-
I don't have it. I'm using a just-in-time inventory system. I don't have COGS.
I got it.
I just happen to be hungry at the moment. I like baked goods. Obviously.
But you make jalapeno breads
I made some jalapeno cornbread last week.
and we used
Anyway, but see, you can see what the difference. So there's actually a third inventory system out there, but it's not relevant for COGS because I don't have any long-term inventory. I'm doing it just in time. I'll only buy it when I need it, and I only buy what I need. I don't have COGS. difference between the inventory at the beginning of the year and the closing inventory at the end of the year is what your COGS actually is. I take my ending inventory, I edit all my purchases, and then subtract out the amount of inventory that I have left. That's the cost of goods sold. This is a method of determining, again, my component expense for making whatever I'm selling. Like I said, the component expense of flour, eggs, milk, yeast, sugar, cinnamon.
You just made cinnamon
I know.
rolls. You just forgot powdered sugar.
Yeah, for the icing.
Yep.
And water. Yes, I know I made cinnamon rolls. I'm not stupid.
Yep.
I can bake.
Shane's the girl at our office. You just want the girls.
I have no problem with that statement.
I know you don't. That's why I do it.
Gross profit for a service business is usually equal to the receipts of income. Well, that's what they're selling. They're selling them. Most expenses you incur in your business are deductible. That's a true statement. You know, I'm not buying it just because I wanted it. I'm buying it because I needed it for the business. It's helpful and necessary and customary. Those are the rules that you're basically trying to satisfy. Is it helpful for the business? Is it necessary for the business? Is it customary for the business? Which is basically what this is saying. I just restated it. So let's talk about some individual expenses that in Schedule C are actual line items. And they're in alphabetical order. Advertising. Well, it's hard to have a business nowadays without having some advertising. Now, I don't necessarily have to have an expense. I can rely on word of mouth. That's advertising, but no expense. But advertising can go a long way. It can fit a lot of different things. And you could say, you could kind of, there's places where you could put things that, well, can it go here? Can it go there? Well, yes. Here's an example. Pen with our business name and our phone number on it. Is this an office expense
Yes.
or advertising expense?
It could go either way.
Yeah.
It's either. There's no
Whichever you
wrong
wanna put
answer
it.
to it because it's both.
The business had to pay for it to provide it as
Right.
advertising.
It's a right
Well, but
off
on
either
top of
way.
that, you know, not only am I giving this out to the customer, I'm using it myself. Okay, I'm not, but
Yeah, I don't use it.
We have our preferences.
I mean, theoretically though, it's an office supply. It's not limited. I don't know. I'm not gonna get in trouble for using this pen.
Because we have a reception table and we sit them on our client data sheet clipboards.
Well, that's what this is.
Yeah. And then they try and hand it back and it's like, no, you keep it.
Well, during COVID, we didn't want it back. You
Exactly.
keep it.
Yeah, it's like you keep it, it's for you.
Examples of advertising costs include, but are not limited to, classified ad, business card, mailers, television spots, promotional brochures, pins, cups, koozies.
They don't go except they give their 5%
I'm more likely to count that as an office supply, but I see your argument. I can accept it.
Yeah, they're 22
Well, there-
cents.
There's no wrong answer to it. Car and truck expense are costs paid to operate the business vehicle. This expense has numerous requirements regarding to support the business use of the vehicle. And it has its own little section, but basically, I can count my mileage that I'm using in regards to business miles. I just have to justify it, be able to justify it. Commissions and fees. Well, if I'm paying for somebody else to help me out, or if I'm paying a commission, okay, yeah, somebody went out there and got me some word of mouth. That was their job, by the way. So I'm gonna pay him a little kickback,
So are we gonna have raises
maybe. I can never find them.
Not one that's working.
Because my biggest problem is that I can't have the waiver out here. It does me no good. I need him down there, but I can't see him.
this year?
And so I gotta have somebody that's reliable because otherwise I get reports that they're sitting on the bus bench.
Or they're smoking, or,
Yeah. I need Leroy. But he
Yeah.
can't.
Well, Chris can't do it either, because now he's taking care of things.
Contract labor, if as an independent contractor I contract out, that's my expense. Contract labor. This is not wages and salaries, that's its own line. If I actually, in my business, have an employee I'm paying wages and salaries for, that's a different line farther down. Depletion is a deduction for exhaustible natural resources such as mineral deposits or timber. That comes off of depreciation expenses. And around here, it's really not much of an issue. I mean, for our business people, it's not an issue at all. But I could have a depletion business in this area. It'd be oil.
I have
Shut up.
it. No, I'm just saying,
I have my clients too, and they have natural gas. Same thing.
well, I have natural gas too, but yes, and we didn't know about that until Susan said, why are you not claiming that?
We didn't understand it.
Yeah.
I mean, you never understand all of this. It takes us years. Hell, I learned things last year. I learned things this year. It's like all of a sudden it makes sense. It takes, yeah, it takes years.
And then every time they change something on us, it's like you
You
gotta
gotta
rethink.
relearn it, you know?
Employee benefit programs. If you have an employee, obviously first, and if you're paying for 401k, if you're paying for medical expenses, that's this line. Insurance. Costs related to the operation of your businesses are deductible. Deduct payments for liability coverage on business property for fire, theft, robbery, but not for your home. However, if I have a home office, I might be able to expense a portion of my insurance that I pay on the house. Do not deduct health insurance here. It has its own line. So if I'm buying health insurance through my business, and we have one client that does, he can expense it here. Interest. This is interest that I pay. Buy a new car, buy a new truck, buy a new building. The interest that I pay is an expense to my business. Goes on this line. Again, if I'm using the home office business deduction, some of the interest that I pay on my mortgage can be expensed in the home office. I did. Legal and professional services. That's us. If I did your taxes last year, I'm going to have a number to plug into here. But it's not what you paid Liberty Tax last year in total, because part of that included your personal tax return. I can only deduct the amount that was expensable for your Schedule C, your auto worksheet, your depreciation worksheet, and your Schedule SE. And any other thing that you can think of related to the business. I can only expense those things. I can't expense, you paid us $200 last year. I can't do the whole thing. I can only do a portion of it.
So at that point, we would just look up what that form costs.
Just look at last year, look at last year's itemized receipt. It'll be there. Now, there's a few occasions where I might heavily discount a return, and so that has a Schedule C on it. Now, if I've heavily discounted it, basically what I'm going to turn around and say, and justifiably so in my mind, is that, well, I only charge you for the Schedule C, so that's what I'm going to expense. I'll expense the entire bill. But like I said, that's if I heavily discount it. Office expense includes the cost of consumable office supplies such as paper, toner, postage, pencils, pens, Kleenexes, paper towel. There's no wrong answer here. Because there's another line coming up where it says supplies. Pension and profit sharing programs. Again, our clients aren't doing this. And you got to have an employee. Rent or lease payments are deductible if you're renting a vehicle, machinery. If you're leasing, you might have to reduce by an inclusion amount. But otherwise, if as a landscaper I went and rented a sod cutter, it's an expense. Repairs and maintenance include the cost to repair and maintain the business property and tools and equipment. Spark plugs, belts, new lawnmower. No, not the new lawnmower.
Blade.
The blades, yes, not the mower.
Or you have to depreciate.
Engine, you'd have to depreciate. Well, then you would have to depreciate
it if you were doing it for business.
Yeah, you'd have to depreciate it because you've changed the useful life of the machine.
Weed eaters, you can't do that, you just gotta throw them away by weed.
Yeah, basically. But they're expected to more.
Tasers is the same way.
But they're expected to last more than 1 year. So, but my weed eater string,
Yeah, you go through a couple.
although that's not repairs and maintenance, my weed eater string is probably more like a supply. Is it wrong? Well, no, not really. Could it fit in a better spot? Well, the weed eater string could, but the spark plug fits here. If I had to replace the spark plug wire, that fits here. New air filter.
It's basically maintenance and repair.
Yeah, nothing like a major overhaul. And if I did it myself, I can't expense my own labor. You'd like to, but you can't.
Depends on my personality, you should have me do it.
Now, if you took it to a shop to be done,
Yeah,
you
you
could
could
write that.
you
I
could
had-
write, you
I
could
had to
expense
take
that
it
labor.
to a shop to finish the wiring,
Right.
but I bought the mower for $200.
Supplies include the cost of materials and supplies not included in inventory cost. Deduct the cost of materials only if they are consumed and used during the tax year. Incidental supplies kept on hand with no inventory or record of use are deductible in the year purchased. So if I was running my bakery business and I was just doing just in time, then my flour, my eggs, my yeast, my cinnamon, my sugar go here. Advertising expense.
Lady or me?
For you. We have to make you look more approachable.
This doesn't. You know this, right? People see us go and they go, "Yeah, I just."
No, actually, it attracts certain types of people. There are definitely special people out there who would be more attracted to going to your desk with all that stuff than that desk with nothing. Because at
When
least
we come in, it looks like you've been here, you know what you're doing. Over here, newbie.
yeah. But also, I have a gauge on what her personality is. I already know whether or not I have a shot at getting along with her, just by looking at all that junk.
Oh, well, we're nerds. He calls it dumb.
I would call that my stuff too. That's all junk back there. But somebody going back there has already got a pretty good idea.
To me, this is a no nonsense, ain't putting up with that bullshit.
That one would scare me, that
That
one would
one,
not.
this
See?
one is more laid back.
Right. That
This
one
one's
would
more
scare me
intense.
back there, cause that's a big boss stuff. It's got 2 monitors.
I just see 2 people with
Pretty-
addiction
Linda's
to
got stuff,
happy things.
she's got Legos and stuff all over hers.
I know, I like that one.
Taxes and licenses directly related to the business are deductible. So, like our truck drivers, they have to every July fill out a form and pay highway use tax.
Normally the business does that though.
Well, but if you're OO,
Not, no, even the business still.
they
usually does
still they pass it on. They'll just
that.
divide.
Sometimes.
I've seen that expense divided out by 12. If you have employees, payroll taxes, sales tax collected should not be recruited in gross income. Therefore, the payments that you make in sales tax should not be expensed. Because, like I said, it was never your money. Travel and meals related to your business are deductible. In general, only 50% of the cost of business meals are deductible. Because you had to eat anyway. But they are giving an allowance here.
But if you use that,
Then you
you can't do the per diem.
You can't do per diem, and per diem 99.9% of the time will
It's
be better.
higher, yeah.
Utilities could be trash, internet, phone, cell phone, headsets.
Headsets, yeah.
But really, when we're talking about cell phone, again, I can't expense the whole thing unless it is only business. And if you're going to claim that your cell phone is only business, when you go to the IRS audit, you damn best have 2 cell phones on your belt. One for personal, one for business. You show up with only 1 cell phone, they're not going to give it to you. Wages, again, if I have an employee, it goes here. Other expenses. So that whole Part 5 section comes back to here as one total number. And if you can't fit it into all these other categories that we just talked about, put it in other expenses, be as detailed as you possibly can. And there's odd things that can go in there. So we take our truck driver, let's see here. Not only do I put diesel in this section, I put in scales, tolls, parking, broker, bobtail.
What's popular?
Come back
That means
empty.
no trailer at all. You're dead head.
You're coming back empty.
There's an insurance for that. Let's see, scales, truck wash.
And there's a blowout now.
Oh yeah.
It's a what?
It's a blowout.
Instead of washing it, they're
Uh-huh.
using
They're
air
just air blowing it out.
and charging it, of course. Lots of things can go here.
Here, to really give you a good example, this is what I listed on my truck edition. This is where I put. No, open. Open says me.
No.
And I went in, and if you right click on the box, you can list each individual thing. And it turns the box yellow. Cargo liability, fleet 1, OCC, ACC, specific fuel that was used aside from the other, the
What
ELD
about
cost,
refrigerator?
That would be under repairs, most likely.
scales, tolls, maintenance grow, I don't know what that is exactly, trailer rent,
Yeah.
towing, CDL renewal, the $29.90 or $22.90, washout, the security dog vaccinations, pre-pass, load and unload fees, road and fuel tax fees, fleet check fees, truck rental, per
We
diem.
get truckers coming and going.
That's
And
why,
then-
as an owner operator, you have a hard time making money.
And then, what I did for my death and my oil and that kind of stuff that he bought, I listed it by company. So Pilot, Plaza Go, Loves, Chargeback, Blowout, and Trucking Subscription.
What's that?
It's a magazine.
Oh,
It's a trade magazine. It's an allowable expense.
it keeps them in the know what's required.
Yeah,
Yes.
if you're an architect and you get if you get architecture today, great.
You gotta know what DOT regs and change.
Yeah, 'cause they don't.
I even let him do his. He hasn't done it recently, and maybe he's just kind of forgot.
What's
Sirius XM,
What's that?
satellite radio.
Satellite
Oh,
radio.
yeah. Keep up with the weather.
Well, actually, they have a raw dog trucking channel too.
Some trucks are equipped where they can put a mini fridge in there.
Yeah.
They can put a TV in there.
Yeah.
So those are write-offs for,
Yeah, if he shows up, you can at certain truck stops you can buy internet access. That's an acceptable expense.
And a lot of them have a deal with all kind of, like,
Yeah, so you don't have to run the truck. They just
showers.
I was
Showers.
asking about those.
If they're paying, okay, let's discuss the parking real quick. I'm sorry.
You've already discussed it. Moving
No,
on.
they get a ticket. That is not. We have one prepared that said you can't write this off. Yes, you can. When it says parking ticket, it's not issued by the police.
There's a difference, even though they might say the same thing.
It's like a
Parking ticket,
when you go camping.
Yes,
camping ticket.
yes,
Yeah.
It's not-
exactly.
It's not.
It's just permission to be registered
It's a
in
permit.
their parking lot.
Yes.
Parking permit.
Now,
And it was
speeding
also-
ticket is not an
No,
expense.
if you get a police ticket,
can't write that
absolutely
off.
not.
That's my spot, and it's a spot.
I'm sorry. Why?
Business use of a home. To use part of your home as business, even if it's not your full-time job as a secretary, you may be able to deduct certain expenses for the business use of your home. Home office deduction is available for homeowners and renters. It applies to a home. It doesn't matter.
How many feet space you use.
If you qualify for the business use of a home, you can deduct either a set proportion or the actual expenses that you can assign to that area. Good luck. You may be limited depending on your profit, but if you're deducting actual expenses, you can carry forward excess losses to next year. Deduct expenses related to working from home. Both qualifying tests must be met. Principal place of business test, regular and exclusive use test. What's that mean? Principal place of business, if I use my home as the principal place of business, this is my home base. Doesn't mean I have to do all my work here. As a landscaper, I can't bring the yard back to my place and mow it.
No, but my motorcycle guy,
Yeah. He works out of a shop.
he works out of his home.
Yeah.
He turned the bottom half of his home into the shop. And he's writing off 46%
Of
of
his-
the use of his home.
As a place of business used to be patients, clients, customers, or deal with them in the normal course of running the business or in connection with your business in a separate structure that is not attached to your home. Well, that's the easiest one. Especially if it has its own meter. For example, if you work out of your home as a freelance writer, mail order seller, or use your home to make your money in a business, you can meet this test, this possibility, By day, James works as a school teacher. By night, he has a home-based business making greeting cards. His home office is his main business. For his greeting card business, he's passed the test. At least that part of it. While doing business, if you operate at more than one location, you must determine whether the office in your home is the principal place of your business. This means that your home office is the main location of the business activity. In general, it's where the money's earned. But like I said, there are exceptions to that. House painter can't bring the guy's house back to his place and paint it. But he can still do the business use of home if he's got a room that where he takes his appointments, writes his appointments, sends out his bills.
It's exclusive business in it.
I really hate this slide. Why is the North Korean flag on it?
What? They're going on a trip.
Yeah, good luck.
But then you coming back either.
Performing essential aspects of the business, such as bookkeeping and other business activities, does not necessarily make your principal place of business. But, like we said, there are exceptions. The rules do allow principal place of business to include part of your home where you conduct administrative and managerial functions if the business does not have another fixed location to carry out these functions. Administrative and managerial functions that include bookkeeping, scheduling appointments, billing, and ordering supplies. Elaine paints murals, which is the example I've been running off of. For residential and commercial buildings, her home office is where she keeps her records, books, schedules appointments. Her home is not the place where she earns the money. The place she earns the money is the establishments where she's painting murals. However, she meets the principal place of business use because she has no fixed location outside of her home office where she conducts her business. Her home office is where she handles all her administrative activities. She meets the test. While the business use of your home is often referred to as the home office deduction, it doesn't actually have to be an office. It can be a separate structure. So Randy has a greenhouse in which he grows perennials to sell as a business. The home office deduction applies. The greenhouse is the home office. This is where you would tell your story about the lady in Andover.
Oh, yeah. We had to fight with corporate on that one. So the lady lived here in Wichita with her grandmother. She bought a house in Augusta. She turned the house and the property, outside property, for growing year round. So the inside had grow lights and each room had different plants growing. Corporate said you can't write off that whole thing. Yeah, you can. They didn't understand. We had to prove to them that number one, she lived in Wichita, and number two, Augusta's, what, 20 miles, 30 miles away from Wichita?
You gotta drive through Andover to get there. So
Yeah. And they finally accepted it, but it took us a couple weeks to get corporate to understand.
But she converted a house, a regular house, into a grow house.
Greenhouse. Mhm.
I'm having that trouble right now, breezes coming up on my point to get done. I don't have enough stuff in my house
If part of your home is used as a substantial and regular site to meet and deal with clients, then the test is met, even if you have another location. Just make sure that you meet the majority of them at your place, if that's the case. I need to speed up just a bit. You take this deduction only if, that's here. There is an exception that actually can only be taken if the home office is only the location of your business, space can be used for storage of inventory or product samples if it's used for your business and used regularly. And so I can include different portions of my house even. I have, I have a bedroom that I converted into an office, and that's part of it. And then downstairs, I have an area that just where I keep office-related supplies or inventory.
And you can count both of the
And I
square
can add
footages
both
of
of those together to come up with a total. Regular exclusive use. This test is met if it is used exclusively and regularly for the business. This is where you get caught up a little bit. I can convert the bedroom, but it better be always converted.
No bed.
I can have a bed in there. I can take a nap on the clock.
I thought you couldn't have a bed because then it would make it.
It really shouldn't, because the temptation of when grandma comes over to, hey, just sleep on this bed, all of a sudden I don't have exclusive use anymore.
Okay, so Kelly sits in my craft room and watches TV all the time.
Not exclusive
Not
use.
exclusive anymore. Which, it's not a craft room anymore. But that's an example.
I can't deduct my home office for my business because I don't do just business things at my computer. I surf the internet, I buy things, I grocery shop because I'm too lazy to go to Walmart. Okay, not too lazy, I just don't like people.
Me too, but I like yelling at people, so I go.
I don't even like driving
Sorry, I
hardly
do that
anymore,
too.
Yeah, and he goes like this walking out their door.
I yell at the ones that are doing fish shopping.
They get in your way,
Lisa
They're
has a
really
TV
no
room in her
respect.
house which the
Really
family
good.
uses during the day. In the evening, Lisa uses it for her business. The exclusive use test is not met in this case because the room is not exclusively used for her business. That's an oversimplification of the whole thing. Let's see if we got that same slide. You do not have to use the entire room exclusively for your business. An identifiable part of the room can be used as your office if it is used exclusively for your business. Their example is a hairdresser. The hairdresser uses a designated section of her family room exclusively for business. This part of the family room does not qualify as the home office. Exclusive use can be as simple as just
You said does not, it says does
Why?
qualify. You said this part of the family room does
Does.
not qualify. It does
Yeah,
qualify.
it does qualify. It could be as simple as the area of a table. As long as the only thing that happens at that table is business stuff.
My best way to describe that is if you think of the old days when people would put a chair and a lamp and it would just be a little reading section, that would be, if you had that reading section as a business area, it would count. Does that make sense?
And the
Yeah, like a nook.
That would count. If you have more than one business operating in your home, each business must meet the exclusive use test. Collectively, I don't have a conflict if I'm using the same office for both businesses. That's not a conflict. So I still meet the exclusive use. And here's the example to support that. Nick, he's got a freelance writer and a lawn mowing office in the home for freelance. He also uses the same room for administrative functions for the lawn mowing. He's met the test for both of them.
My thing is, the way I think of it is, as long as they're, I don't care which business they're doing in there, as long as nothing else besides those two businesses is being done, I'm good.
And now I'm going to take everything that I just said and throw it out the window. Because daycare doesn't have to be exclusive.
Yep.
If you're running a daycare out of your home, What you actually need to do is identify areas that the kids can't go and subtract it out of your square footage. Off limits.
Bedroom, my bedroom.
Yeah.
Off
The
limits.
kids are not allowed to play in the furnace room for obvious reasons. They don't play in the laundry room, so I exclude those areas. But they're in the TV room, they're in the kitchen, they're in the bathroom, they're in the bedrooms because it's nap time.
Or maybe one of them's a playroom.
Yeah. All of those will be included in the business use of home calculation. And for daycare, the business use of home calculation is calculated by hours. How many hours is the daycare open? How many days a week?
Didn't see our girl this year.
Yeah, she's pretty bad about
Being on time.
yes. Storage of inventory or product samples. Well, we've already kind of covered this. If I have an area down in the basement where I'm keeping my stuff, that could be included in as long as it's exclusive use. Again, it doesn't have to be the whole room. It could be that set of shelves on that wall. To calculate the amount of square footage in that set of shelves. $88.29 is your form. And it comes back to Schedule C. To do this, first I need to find the percentage of use of the home for the business. I need to find the square footage of the area that I'm saying is exclusive use relative to the entire house. Divide those two out to come up with a percentage. And from that point on, I have a percentage that I can take a percent of my water bill, a percent of my gas bill, a percent of my home and mortgage interest, a percent of my internet if it's not exclusive, and I can mix and match. If I just paint my home office, that is a direct expense attributable to only to that office. I can deduct all of it. If I have my whole house painted on the inside, I have to take a percentage of it based on the business percentage. Any reasonable method can be used to determine the size of the home office. Most of the time we are running square foot, but there are an example up here is like if all the rooms in the house are the same size, and Antonio is meeting this, 1 room out of 5 rooms of his apartment are all about the same size, and he's using 1 for his home office, so therefore 1/5 is an appropriate percentage. Like I said, somebody that's running a daycare out of their house gets a little bit more complicated because I have to know how many hours you're open during the day and how many days out of the year you're actually open. And it usually comes up with and when you get done with it, you're going to come up with like 8%. That's fun. So here's our form. And like I said, we have direct expenses and indirect expenses. Direct expenses are those that are specific to that room. I put in new carpet in that room. I could carpet the entire house, but what I might want to do is get a separate bid for just that room. That way I have a direct expense instead of trying to figure out a percentage. If I paint that room, indirect expenses, house insurance, renter's insurance, other things that I'm buying for the entire house, I have to deduct down for this business use part. Do not do this. I could actually depreciate as a business expense. I can actually take a depreciation expense for the part of business use in the home. Don't do this. Because if you sell your home, then you have to recapture the cost of what you expensed. And this is where I'm having a problem with one of my landlords, just taking this out from what happened, from what we're talking about today to how this blows up at you. He sold one of his rental properties. He sold it for, let's just say, $130,000. He paid $90,000 for it back in 2002. Now, simple mathematics would say, well, his gain on the sale is the difference between what he paid for it and what he got for it, right? No. He has depreciation in it. So I have to take that $90,000, subtract out all these years of depreciation expense, and that's my new basis. And so all of a sudden, instead of comparing 90,000 to 130, I'm comparing 50,000 to 130, and he owes a boatload in capital gains taxes. And he didn't understand. I'm trying my best to help him understand. But don't depreciate the business use of home. It's not worth it. Because, again, this is exactly what you'd have to do. And I'm not going to get into depreciation today. I have a whole chapter for that.
I'm sick on Monday.
If the deduction for the business use of your home is greater than your tentative business profit, you may will apply unused portions of the expense to future years. Roll it over. Not going to happen very often, but you could. There is a simplified method for all of this. So if you're going to run the simplified method, you basically, instead of having to figure out the entire square footage of everything, I could just say, I'm going to elect to use the simplified method, which is going to basically base it on 300 square feet. And then it'll come up with an expense. I don't have to sit there and plug in what my mortgage was, what my utilities were, what my insurance was. The formula is just going to go ahead. The formula is built to include all of that in there. So you can elect to use the simplified method if your home office area is 300 square feet or less. If it's over 300 square feet, you'd be better off using direct and indirect expenses. And if I use the simplified method, I still can do direct expense. And I can go back and forth between years on that. Daycare providers also have another expense that they could use is food. The IRS has a standard rate. So they can use actual expenses for what the daycare provider paid for food, or they can use the IRS assigned rates. And currently, this is what the IRS assigned rates are. Breakfast is $1.65 per kid. Lunch is $3.12 per kid. Dinner is $3.12 per kid. Snack is 93 cents per kid, and you can have 3 of those in the day. But you better keep track of how many kids you have every day. If you're going to do this, I have to know exactly which kids were there what day. And I really kind of need to know when they showed up and when they left. Because you're going to tell me that he had breakfast, lunch, and dinner, and he left at noon. The IRS is not going to be very happy with you. And that's just going to give him an excuse to look farther. Was this an honest, innocent mistake? Or are you trying to pad your numbers? And so they'll look into it farther. Used to be daycares was our biggest nemesis. People were really trying to work it. Well, I run a daycare out of my house. I'm just watching my nephew and such. I'm getting paid a little bit for it. Well, Yeah, you're running daycare, all right. But are you running a behavior? Are you running a business-like manner? This is one of them. Well, they supply their own food. Okay, well, that's an acceptable answer. But what else? Did you go to the park? Go to the Y? Go to the movies? Did you get movies? Now you go down to Goodwill and buy a whole bunch of Disney movies that I found down there.
If it's a legitimate daycare and they have an animal, they are required to have it vaccinated.
Uh-huh.
That is a write-off.
Yeah, I can expense that. But don't tell me that you didn't buy anything for the kids. What do they do? Sit there and stare at the wall all day and not buying it.
Damn right, and I slept.
I expect to find crayons and colors and pencils and paper. And if you tell me you don't have that, I'm really questioning whether or not you're running a daycare.
Now, second and third shift would be a little different, wouldn't it? Well, third shift is what time?
Third shift is, well, it would be overnight.
It's like
7 to
9
11.
to 7.
That's the hardest one because,
It's a
You're not
different.
feeding them, you're not entertaining them.
yeah, but you're still there. They still might have a snack.
Right before bed, yeah.
They might have a snack and then they might have breakfast. Unless their circadian rhythm is totally off, they're opposite. Okay, well, I guess I could. Nothing to stop me says I can't do that if the kid's backwards. Can I have 3 shifts of daycare? Yes. And it makes a difference on the formula because now all of a sudden I'm saying I'm open 24/7. But I better be able to prove it through attendance records. And discounting those and subtracting out the days that, okay, maybe I have one kid who's overnight. And he didn't show up, last Wednesday. I better have that noted and subtract that out of my hours because although I was available, I really wasn't open. And there's a difference.
And if they would charge different price for a different shift.
Yeah. If I have a premium because, I'm providing third shift. I had, she mentioned the daycare. She did run a third shift and she had her daughter doing it. The daughter would be the one that was available. Just kind of dozing in the living room, waiting for the kid to wake up and need to go to the bathroom or get a drink of water or look for the monster under the bed. Well, she was the one sleeping. And that was reasonable. She paid her, I expensed it. Schedule F is just Schedule C for farmers. I'm not going to go into a lot of detail because you're really not going to see it. And it's not that hard. It has some special expenses that are directly rated to farms. Especially if you have livestock or something like that. I'm not going to get into that detail. It's a huge rabbit hole. And by the way, livestock, except for chickens, is a depreciable asset. I have to depreciate your cow, your horse, your goat. So, yeah. And we'll get to it's a 3-year property. You can kind of see F looks a lot like C. It behaves a lot like C.
Must be showing it to somebody.
Good. Get somebody in there so that the burglars can hit his place instead of ours. The only thing that saves us is it's pretty well known we don't have any cash. That's why I'm so glad we don't do the Get 50 now.
Yeah, but you have a lot of equipment and stuff, but
At this point, you'd actually be doing him a favor by
Exactly.
stealing it.
go ahead and get that redone if that's all that.
All right, so Schedule C, Schedule F, Profits generate self-employment tax. Yes, I skipped a lot because it's redundant or
360.
so specific. Yeah, 360 is what she says. Self-employment tax rules apply no matter how old you are. Boy, yeah, we had one guy in here. I'm 75, I don't have to pay anymore, do I? Yes. You must pay self-employment tax even if you do not have to file a tax return. That's where that $400 or more comes in. While you might not pay taxes on it, you still have to pay self-employment tax. Or you worked for a church and you had $108.28 of income from the church, and the church is tax exempt. That's where Medicare tax actually becomes at that number right there. And we round to the nearest dollar everywhere except here. 28 cents.
Yeah, weird.
Self-employment tax is figured on the total of all your income from self-employment. If I have net loss, I don't have self-employment tax. It's that simple. This includes part-time and full-time self-employment activities. You and your spouse must file separate SEs if you are both involved in the business, or one of you has a business, the other one has a different business. Each person gets their own SE. So they pay their portion of their Social Security, their portion of their Medicare. Though self-employment is the Social Security tax and the Medicare tax that would have been normally withheld from your wages on your paycheck. Well, I'm self-employed. I got to take care of that myself. Do I have to do it every pay period? No. I can do it at the end of the year on my taxes. But keeping in mind, if I don't pay 90% of my tax bill throughout the year, I'm subject to underpayment penalties. That's why people that are on self-employment should pay quarterlies. If you know you're going to make money, you should pay quarterly taxes. How much should you pay in quarterly taxes? Well, here's a pretty good idea. I always told my guy 30%. Figure out your profit for the quarter and send in 30% of that number. Why? Why was I telling him in 30%? Well, no, not really. It was a reasonable number. Because of that 30%, 15.3 is self-employment tax. I'm already halfway there. Then what's the other 15%? Income tax. Assuming he's in the 15% tax bracket. Like I said, you got to monitor. Where are you at? For him, 30% was about right. Other clients would have other numbers, but this is where I was for him. Because I knew 15% was just for self-employment tax, and I knew he hung out around in the 15% tax bracket. So it sounds like it was a big number. It really wasn't. It was sufficient. And don't forget, run this same number again for state. Except that I don't need to worry about self-employment tax on the state. So my answer to him on the state side was send in 15%. Usually that was a little high, but he didn't mind. Self-employment tax from Schedule SE goes to Schedule 2, Line 4, which then shows up on your 1040. After you use up your non-refundable credits, but before you use your refundable credits. I cannot pay self-employment tax with non-refundable credits. Unfortunately. There is an allowance on Schedule SE to help you out because if I was my own boss, I'm not paying, or if I was working for the man, what's being withheld from my paycheck isn't exactly everything that's going into the trust fund for Social Security and Medicare. The employer is kicking in on that. Well, that's what this is. I could take 1/2 of my self-employment tax and write it off as an adjustment to income, and thereby decreasing my income tax. Not a lot, but it's something. Yeah, $5,000 adjustment to income. Good. That would be some pretty decent tax savings. It might change your tax bracket.
What's educator expenses this year?
Still 300, except that there was an allowance. I don't know how they're doing it. That says that if I had expenses above and beyond, I might be able to write them off as part of Schedule A. I'm still waiting to see how that works. I don't have any guidance on that. But in the meantime, that's a different chapter. Net self-employment income includes all business income, less all business deductions allowed for income tax purposes. You must claim all allowable deductions. I can't stand people who are trying to basically fish for a number. Bring in all your junk. Don't find out that, oh, I owe $5,000. Let me run home and see if I can find more receipts. What are you trying to pull here? I don't want to answer that question. The more trips you make home to find more expenses, the more suspicious I get.
Because you basically came in and learned what you need to do to beat the system and go home and do nothing.
Right. He thought it was enough and found out that it wasn't enough, so I'll go home and find some more. Well, I got a couple questions for you. Are they legitimate at this point? Or are you just pulling numbers out of thin air, which is possible? Or why did you keep these receipts? Why didn't you just bring them all? Well, what are you trying to pull?
Those people that come in with a Schedule C or wanting a Schedule C with no expenses, if you look at how much they made, it's usually the very top point of the max amount of earned income credit.
And I will release those numbers as soon as everything's set in stone about what the maximum for each amount is. So that gives you an idea of where to look. So even if I have multiple Schedule Cs as a single person, I only have one Schedule SE. Some people exempt from self-employment tax, children under the age of 18 working for their parents' sole proprietorship. Run that lawnmower business and make sure you have your kid with you and you pay your kid. That's an expense. And he doesn't have to necessarily report it, at least not for self-employment taxes and purposes, does he? Little loophole.
If he paid his kid, right?
Yeah.
But they have to be under 18.
Under 18. Termination payments of former insurance agent where the criteria is met. I'm not worried about that. Individuals from a country with an international Social Security agreement. I'm also not really worried about that, but the list of countries that have reciprocal programs actually fairly long. I looked into it one year. It's more than you would think. Member of certain religious sects with an accepted form 4029. They're not subject to self-employment tax because they're never going to collect Social Security by religious order. Again, I point at, well, your biggest example of this, the easiest one over is your Amish people. They would fall into this category. Clergy and ministers who have approved Form 4361, these are the ones that have taken a vow of poverty. So basically, you're looking at your Catholics on that one. They're not subject to self-employment tax. Why am I looking at this point? Because maybe if I was, as a Catholic priest, I'm taken care of by the church. Well, it's the side activities that are subject to being Schedule C income. Perform a marriage. That's not part of a regular church service, for instance. Do a funeral. That's not part of a regular church service, for instance. That's something extra. That really a nominal charge, if any. Just slip the pastor something under the table on your way out.
Does he have to declare it as a tip?
It's not a tip, it's income. Now, if he's doing in the regular process of his regular duties, like for instance, you might slip the pastor a little something for a baptism, but it was actually part of the regular church service. That's actually going to kind of fall by the wayside because it was part of the regular service. It's just those ancillary activities that would be subject to Schedule C treatment. Which is everything that I've said here. Housing allowances received by the minister are paid in the ass. Minister who receives housing allowance may exclude the allowance from gross income to the extent that it's used to pay expenses in providing the home. Generally, those expenses include rent, mortgage, interest, utilities, repairs, other expenses directly related to providing the home. Can't be more than the reasonable compensation for the services. If you own your home, deductions for a mortgage and interest and real property could still be claimed on A, even if the same numbers are used for the housing allowance. If your housing allowance exceeds the lesser of your reasonable compensation, the fair rental value of your home, or your actual expenses, you must include any excess housing allowance in income. So if I don't spend it, and I kept it, it's income. I gotta pay tax on it. As long as I take my expenses and use them to pay for the house, and that's what they're there for, I don't have to report it as income, it's an exemption. And I'm not going to go over due diligence because it has its own chapter.
I'm not worried about my landlord. My landlord for money.
Well, we can call it good. 11:30 is not bad. Could have been so much worse if Matt was here.
Right. We'd still be sitting here with half the packet.
Yeah, we've been only halfway done. Bring your espresso next time. It's depreciation.
That's the one.
I'm sick.
That's the one class. Wednesday I won't be here.
That's too bad for you. You'll get depreciation. That's Monday's class.
Yeah, Wednesday is the one that I was hoping it was gonna be for.
Sorry.
Right, ceiling,
Justin's got,
Monday.
Justin's got two foot.